Hello and welcome to the final part of chapter 4. Yes, we only had 4 actual drills sections in this chapter. And this part, is going to handle petty cash. And if you don't know what petty cash is, this is a small, basically bank account that deals with very, very small funds to pay different expenses like stamps or donuts, just small insignificant little items that we have to keep track of. Now, for us, we're going to take any receipts or basically how much we're going to deposit into the account, and we're going to make a petty cash fund. First thing we need to do is actually establish a account for petty cash. But of course, I'm going to read the memo that is in your book. So on January 23rd, 2021, we withdrew $100 in cash from checking to have petty cash on hand. Create a new account for petty cash, and then record the transfer of $100 to fund petty cash. Then we're going to actually pay something out of petty cash, which happens to be a squeaky clean car wash. Nice. Alright, so starting off first, we need to go to our chart of accounts because we are creating a brand new account in petty cash. So starting off, let's go new, and his bank, and detail type should be cash on hand, and we're going to call it petty cash because this is the nice lockbox that we have in the office. Petty cash, and we're not going to enter a balance because it does not have a balance, so be careful. Again, if you ever need to add a balance to an asset account, you choose one of these. Okay, so we're going to go ahead and hit save and close. Next, we're going to add something new by going to new. This one, since we're dealing with banks and basically transferring money over to another bank, we're going to actually click on transfer to fund this account. So transfer, we're going to transfer funds from checking to now petty cash. Okay, and the amount that is being transferred is $100, and we make sure we get the right date, which is January 23rd. So for us, we're also going to put in the memo account since this is the first transaction. Establish petty cash. Okay. We'll hit save and close. And you're going to notice now your checking went down by 100. And now petty cash has gone up by 100. We will always do this when we need to replenish petty cash. Again, basically transfer money from checking into petty cash when we need to basically fund more money. Now, how do we need to expense out petty cash? Well, to expense, we'll hit new, and since expenses are dealing with vendors, kind of like a bill, we'll hit expense, and who did you pay? Well, we actually paid Squeaky Clean, so there's Squeaky Clean car wash. Okay, and you gotta make sure, since we paid it out petty cash, be careful and make sure you put petty cash. Okay. So we did this on January 23rd. And we paid by cash. Okay. There is currently no reference number here, but we can always add one if we need to. Again, if you need a track, it depends on the company. So this is going to be for automobiles since it's a car wash. Working at the car wash. Yeah. Working at the car wash now for 1995. Okay, so there is our expense. Again, the memo to keep track. Not cash. Car wash. Car wash. Okay. And then we're just going to hit save and close. And there our expense has been recorded. Notice again, if, since we're still on chart of accounts, the amount in petty cash has decreased. And again, if we need to bump it up to 100 because it gets too low, we basically take whatever difference is between $100 and what's currently in petty cash and transfer from checking to petty. Okay. Now, last little thing that we would have in our drill is to perform a purchase of an asset with a company check. So again, not all purchases will be transactions on account, and not all checks will be written to pay for bills and expenses. If something is purchased and paid for with a check is rewritten and the purchase is recorded. Basically all that's going on. So, January 23rd, 2021, we purchased a custom truck liner with a 10-year warranty, 10, for the back of the truck. Paid for it by writing a check for $540. Okay, so we paid a check. So we'll go new, we'll go to check, go into the check, and we end up paying Diego's Road Warrior Body Shop. So, payee, there's Diego. Okay. Again, if it has a bill already, it'll pop up. We want to close that out. January 23rd. We want to go to checking. Make sure, double check, just in case, since we've been going back and forth through petty cash. And we want to go to original cost for the truck. Alright, now the reason why we're doing this original cost is, again, basically we're just changing up the value of the truck or adding something to it, basically getting it ready for service. Any cost that gets ready for service is part of the actual asset cost. Okay. So amount was $540. And our memo was for custom truck line with 10-year warranty. Okay. We're going to go ahead and hit save and close, and that's really all we're doing. Notice that we're not paying a bill. We're not doing much else. We're just going ahead and write a check for purchase. So if we want to check it out, we can actually go look at the asset registry, which of course is right here in the chart of accounts. And we find truck original cost, view registry, eliminate the pop-up, and then you're going to see that the new cost of the truck, basically the asset, is $14,035, which has both the open balance and now our new check, to show that if we sell it, we need to sell it for more than that amount currently, unless there's depreciation involved. Then that's something else. We're not getting into depreciation yet. Okay, so guess what? That actually closes out our chapter 4. All you have to do now is go through the due sections and make sure you print out the right stuff that is needed on your checklist. If you have any questions, please let me know, and make sure that your trial balance actually matches on 285 to yours at the end of all this. Okay, so I will see you next time for chapter 5, which means we're getting closer and closer to halfway finished with this course. Nice.